Good morning, Steve Reed in Chicago with the morning grain comments. Mixed grain markets with soybeans down about 8 cents. The soybean oil market a little bit lower, meal unchanged. Nearby corn's up 2 cents, and the July-December corn spread continues to gain July over December. And also we have wheat up anywhere from 6 to 9 cents. You've got the Kansas City minus Chicago wheat spread record high, and you've got the corn wheat Chicago spread near record low for this time of year. Overnight headlines, I think we're looking at a lower stock market, higher dollar, lower crude. Crude's back down to $66. And so there is that concern out there about, just how bad is the banking system and what impact is that going to have on global commodity markets. One of our brokers asked about what did the funds, commercials, do in the last 2008 bank crisis. It's interesting that in 2008, the managed funds reduced their longs, index funds reduced their longs, and commercials reduced their shorts. And when you look at today's markets, managed funds are getting out of their longs, index funds have gotten out of their longs, and commercials have reduced their net short positions. In the cash markets, crush margins here in the U.S. have dropped pretty sharply. We're also noting that despite the lower Argentina crop, soybean meal prices continue to drop lower. A lot of people are asking if July meal at $430 is a good buy for end users. It should be in a normal year. We just don't know what impact protein demand is going to have if there's an economic slowdown. We also note that in nearby corn, recent export business has helped tighten the situation, and also that continues to help the spread. But farmers not selling, and probably won't sell until he gets his crop in the ground. Over in the wheat, there was some rumors floating around that Russia may halt wheat exports because of low prices. That's unconfirmed rumor. We also noted that there's talk about 3 cargoes of Brazilian beans coming into the U.S. East Coast. Some people think that this is organic beans that normally come in to the East Coast. Certainly that's offering resistance to our bean market. And when you look at the spread between Brazilian premiums and U.S. export premiums, it does work for Brazil beans to be brought into the United States. We're also watching pretty closely any relationship that Russia and China might have with Brazil, and just wondering if China can get the wheat they need from Russia, and the corn from Ukraine, and beans from Brazil. So we're watching a very choppy, sloppy trade. I think the March 31 stocks and acreage report will give us a lot of new fundamental news to trade besides money flow.